Hi, Gary here. You know, there was a New York Circuit Court judge by the name of the Honorable Learned Hand, not a name you forget very easily, who served in the 40s. And he was a philosopher and was known for a lot of different things. But one of the things he was known for and said quite often was there are two tax systems in the United States, one for the informed and one for the uninformed. So here we are at year end in December, and you're looking at ways to reduce taxes, mitigate the tax risk. Very important aspect every year you might look at. So I want to give you one really kind of different tax tip you might have heard about before that we've used effectively with many of our clients. So, as you probably may or may not be aware, when President Obama signed the new tax law into place back on January 2nd of this year, the marginal tax bracket for estate taxes, death taxes, is 40%. So if you have somebody with a large estate, they know that anything over a certain amount, and it was $5.25 million per person, would be taxed at 40%. So many times in their transition of their wealth, they're transitioning money, gifting it from themselves to typically their children or nieces and nephews. So let's use an example of how we might do this in an informed way, pursuant to the Honorable Learned Hand. Well, let's say, and this is one of the examples that we have out here, is you have someone who wants to give, again, they give $14,000 a year of an annual exclusion without any gift or estate tax. So they're trying to maximize this gift every year to their children. So they have 3 children and want to make 3 gifts of $14,000, which is $42,000. Now what they've done in the past is they sold this stock that they had, that they bought many years ago, for $12,000. It's worth $42,000. So when they sell, the difference is $30,000. Based on the federal tax and the state income tax, that's a 20% tax on $30,000 or $6,000. So they sell, and they have to sell more stock, obviously, to come up with $42,000 net to then send and write checks of $14,000 each to their children. So instead, we said, why don't you consider this when we looked at their children's tax returns? There was another part of the law that was made permanent on January 2nd, and this part of the law says this basically, that if your taxable income, federal taxable income, is in the 0, 10, or 15% tax bracket, then any capital gains is 0. That's right, 0. You say, well, how does that work? Well, let me give you an example. So we have this child making $90,000 gross, married, 1 child. Now, when you take away their itemized deductions, you know, for interest and real estate taxes and gifting and all that, and personal exemptions, there's 3 people, their taxable income gets down to $58,000. You say, well, why is that important? Well, when you add on, if they gift the stock to the child rather than the cash, and the child sells the stock, now there's a capital gain. When you add the capital gain onto this $58,000, it comes out lower than this $72,500 threshold. Well, what is that? That's the point at which we go into the next tax bracket at 25%. So, long story short, any taxable income that's under $72,500 has a 0% tax on a federal tax. You say, why is that important? Well, think of this. If you have 3 children and you're gifting this $42,000 stock, it would have cost you $6,000 in taxes. It costs them 0. The family saves $6,000 in taxes. And I'm not getting into the state for the moment because that may vary state to state. But you get the general idea that if it's transitioning wealth from one family, parents, let's say in this case, to children or nieces and nephews, you can save $6,000 collectively by being smart about using these different tax entities, the taxable income. And it's kind of a neat strategy. We've used it a lot in the last 3 years since it's been available. It's now been made permanent. So it's something you may want to consider. So if you like this strategy, then call your trusted advisor, an accountant, CPA, or a tax attorney, or certainly call us to go through this strategy to see how it may affect or not affect your family situation. And of course, there are many other tax tips that you probably have seen from year to year that you might want to consider as well. So certainly give them or us a call if you'd like to discuss that further. So until next time, enjoy.